Internal Revenue Service IRS tax news. IRS readies nearly 4 million refunds for unemployment compensation overpayments. IR 2021-151, July 13, 2021, Washington. The Internal Revenue Service announced today it will issue another round of refunds this week to nearly 4 million taxpayers who overpaid their taxes on unemployment compensation received last year. So let's just recap this unemployment compensation thing and think about what these refunds will look like or what you might be able to expect with regards to them. So remember that unemployment is usually something that once received you have to include in income, but they made an exception for part of that in 2020. However, they made that exception late, so that's what we're dealing with now is the IRS dealing with people who filed their tax return having included the unemployment compensation, which didn't need to after they have basically adjusted the law saying that you don't need to include the unemployment compensation. And then the next step is, well, what do we do from that point in time? And the IRS basically said you don't need to refile your tax return. In other words, don't amend the tax return. You will confuse the IRS most likely if you do in most cases. And instead, the IRS is going to try to do it on their side, pick up anybody that basically claimed the unemployment compensation which didn't need to and make the adjustment for it. So let's just recap this unemployment compensation a little bit more detail. Generally, if you got unemployment compensation in the past before 2020, you would get a 1099 from the state indicating that you would have to include it in income. That's typically what a 1099 means. And then you would include it on your 1040 income line. Then you'd be paying taxes on it because income is bad for taxes, of course, because it's an income tax. So if you have to include something in your taxes as income, it's usually not good because then you'll have to pay a portion of the taxes on it. If the IRS says that you got money, such as unemployment compensation, but the IRS is giving an exception so that you don't have to include it in income, then that's usually good because then you got the money, but you don't have to report it on income, which means you're not going to be taxed on it generally. So that's basically what happened when they adjusted the law. So you still got the 1099 most likely because they didn't change it, that early to stop the 1099, but they basically said that a certain portion of it is not required to be included in income. Now note that means that if this affects your refund, it doesn't mean you're going to get the whole refund back for the amount of the unemployment payment that you received. So in other words, if you got $1,000 of unemployment, you can't expect to get $1,000 back from not reporting or this change that could be taking place. What would happen is the impact of that $1,000 having been recorded in income on the bottom line of the actual taxes you would owe. You would expect that would be, if it was a simple tax return, to be just the tax rate that you would have. So if you had a 20% tax rate, you'd take the 20% of the 1,000, and that's what you might expect to have been the change. However, it's not that simple due to the fact that we have a progressive tax system, so the tax rates can change, and it could have impacts on other things because once you adjust the income, it can adjust the phase-outs and whatnot for things like the child tax credit, possibly earned income tax credits, and other kind of deductions and credits. So it can get somewhat complicated. So that's basically where we stand. So the IRS basically said, hey, don't amend the tax return. We know we did this late. We're going to try to go through all the tax returns that basically have this unemployment compensation, make the adjustments for them, and send out the refunds without you having to do anything on your side for the most part. Okay, so that's where we stand. The American Rescue Plan Act of 2021, which became law in March, excluded up to $10,200 in 2020 unemployment compensation for taxable income calculations. The exclusion applied to individuals and married couples whose modified adjusted gross income was less than $150,000. Refunds by direct deposits will begin July 14th, and refunds by paper check will begin July 16th. So July 14th, July 16th. The IRS previously issued refunds related to unemployment compensation exclusion in May and June, and it will continue to issue refunds through the summer. So they're going to continue to do this. I think what they did before is they tried to get the low-hanging fruit, as I would call it, the easy returns out first. So the ones that were fairly straightforward, basic returns that didn't have an impact on a lot of other things, were the ones I think they tried to do first so that they can get the refunds out as fast as possible. I believe, one, to get the money to people as fast as possible, and two, so that they can track their progress and say that they did a lot of work on the front end. And then they're going into the more difficult returns where the change in the income is going to have a more complex impact on the rest of the return, and try to get to those and figure those out and send them out. So to ease the burden on taxpayers, the IRS has been receiving the Form 1040 and 1040-SR that are filed prior to the law's enactment to identify those people who are due an adjustment. For taxpayers who overpaid, the IRS will either refund the overpayment, apply it to other outstanding taxes or other federal state debt owed. So if they have an adjustment to the refund, hopefully they give you the refund. But, sometimes the IRS is now talking to more and more people that you might owe money to, like the state and others. And if you owe money to them, the IRS might just pay them on your behalf. And so you might want to check that out. And you could check that out, I believe, if you go into your account on irs.gov and see, the transaction history and whatnot. You might be able to see if you didn't get a refund and they gave it to somebody else that you owe money to or something like that. You might be able to look that up there. So for this round, the IRS identified approximately 4.6 million taxpayers who may be due an adjustment. Of that number, approximately 4 million taxpayers are expected to receive a refund. The refund average is $1,265, which means some will receive more and some will receive less. So whenever they give these averages, it's kind of a tough thing to go by because it's an average. So there could be outliers to the average that kind of skew that number quite substantially. So again, you kind of want to think about your own unemployment compensation. You might want to actually plug it into your tax software, not so that you can file the amended return, but so you can double check that the government has done the calculation properly and possibly be able to plan for the approximate amount of the adjustment that you might be receiving. So most taxpayers need not take any action, and there's no need to call the IRS. So the IRS is basically saying, don't call us, please. We can't call. If you call them, by the way, your chances of getting a hold of them apparently are quite low, and depending on the number you call. But in any case, however, if as a result of the excluded unemployment compensation, taxpayers are now eligible for deductions or credits not claimed on the original return, they should file a Form 1040-X, amended U.S. individual income tax return. So, general rule is that you don't file a 1040-X amended return because the IRS is saying they're going to take care of it on their side. But they have this kind of exception to the rule, which is that if there's going to be a change to your taxes that wasn't there before, so let's read that again. However, if as a result of the excluded unemployment compensation, so meaning it wasn't on the tax return before, and now if you put it on the tax return, taxpayers are now eligible for deductions or credits not claimed on the original return, meaning you didn't have them before because you didn't have the income related to it, or there was an income phase out, and the adjustment to your income line had some kind of impact on things like credits or deductions in that way. Then they want to file a 1040-X. Now, how in the world would you possibly know that if you had took away the unemployment compensation that it would result in this happening? That the only way you would really know is to actually do the tax return. So the safest thing to do is to basically hopefully you got the free tax software to do this if your income is below a certain threshold, which you can find on IRS free file software, and then try to adjust your taxes so that you take out the income that's related to the unemployment, and then the software will tell you whether or not you kind of qualify for one of these items. And you could say, okay, if I take out the taxes, do I somehow now qualify for the earned income tax credit or something like that? And it shouldn't be the case most of the time where it would, meaning it might have an impact on the calculation of some deductions, but it's probably not the case most of the time that you didn't have the deduction before, and then if you remove the income, then you have the deduction unless there's some kind of income phase out or something like that that's taking place. But again, the only way to really know it is to file is to actually kind of put it in the tax software and then check it out. And then if that's the case, then in that case you might need to file an amended return, and or you might see what the IRS does, see if they line up to what you got on your tax side, and if they don't, then once you get whatever you get from them, you can make the argument that they're missing something or something like that, and you could file the amended 1040-X return at that point in time to remedy the situation at that point. So taxpayers should file an amended return if they did not submit a Schedule 8812 with the original return to claim an additional child tax credit and are now eligible for the credit after the unemployment compensation exclusion, did not submit a Schedule EIC earned income credit with the original return to claim the earned income tax credit with qualifying dependents and are now eligible for the credit after the unemployment compensation exclusion, are now eligible for any other credits and or deductions not mentioned below. Make sure to include any required forms or schedules. So in other words, if the IRS already had the schedule, it looks like they think they can do it on their side, meaning if you had the earned income tax credit, for example, before, and then there's just an adjustment to it because of the adjustment in the income or something like that, then they can basically figure it out. But if you weren't qualifying for it before, and now you are, and they don't have the schedule at all, that seems to be a loop, like a problem for them, where they want you to actually file the amended return, which again should be a fairly low, really low, you would think, percent of people. But the only way you'd really know that is to check it out, put that in your tax return and do the calculations on your side and double check that the IRS is doing it properly. So taxpayers do not need to file an amended tax return if they already filed a tax return and did not claim the unemployment exclusion. The IRS will determine the correct taxable amount of unemployment compensation and tax. If they have an adjustment because of the exclusion, that will result in an increase in any non-refundable or refundable credits reported on the original return. So that's good. Did not claim the following credits on their tax return but are now eligible when the unemployment exclusion is applied: recovery rebate credit, earned income credit with no qualifying dependents, or the advanced premium tax credit. The IRS will calculate the credit and include it in any overpayment. File a married filing joint return, live in a community property state, and entered a smaller exclusion amount than entitled on Schedule 1, Line 8. Taxpayers will generally receive letters from the IRS within 30 days of the adjustment, informing them of what kind of adjustment was made, such as refund, payment of IRS debt payment, or payment offset for other authorized debts, and the amount of the adjustment. Note that you're going to want to keep those payments as well, because any kind of adjustment you had to the prior year tax return could, if there's any rollovers or whatnot into the current year, then you want to make sure that you have the documentation on that for your tax preparation for 2021, which you'll be doing by April 15th, hopefully, if no other craziness happens in 2022.